Recently, renowned trader Peter Brandt voiced criticism directed squarely at Ethereum, the second largest crypto by market capitalization, denouncing it as a joke coin in a blunt assessment. Celebrated for his insights into financial markets, Peter Brandt spared no punches as he castigated Ethereum, arguing that it lacks the essential characteristics required for long-term success. His remarks underscored each's perceived weaknesses as a store of value and its struggles with layer 2 solutions and high gas fees, factors he believes contribute to its inferiority compared to Bitcoin. To support his assertions, Brandt posted an Ethereum Bitcoin price chart and his criticism of showing the asset's consistent decline relative to Bitcoin in the past year. I get tired of saying it, but ETH is a junk coin despite mindless devotion of Etheridiots. As a store of value, it is junk, a BTC pretender. So far, its functionality is also junk. Difficult to deal with L2s and outrageous gas fees. Of course, it will always attract investors. Is Peter Brandt, April 4th, 2024. And while Brandt was dishing out his critique on ETH, other voices presented contrasting perspectives on Ethereum's prospects. And they generally set up and they assert the jumpy people. The asset's JP Morgan Global Market Strategy team recently unveiled reasons Ethereum may not be classified as a security. And they're classified a daily staking ecosystem towards greater decentralization. As you are supplied of all the events that this transition, evidenced by the decline in Lido's share of stake ETH, the scene is a positive development that could assuage regulatory concerns and, quote, bolster Ethereum's case against her. Essential example and JP Morgan's analysis draws attention to the pivotal Hinman documents, which have shaped the SEC's approach to digital tokens. And these documents emphasize the importance of network decentralization in determining whether tokens qualify as securities, suggesting that tokens on sufficiently decentralized networks may be exempt and at present. Interestingly, Brandt's criticism of ETH sparked a diverse range of reactions within the community. While some stood behind Brandt's assessment, others vehemently opposed it and came to Ethereum's defense. Among those supporting Brandt's critique was Adam Back, CEO of Blockstream. Back weighed in, highlighting Ethereum's vulnerability to significant hacks, scams, and rug pulls, which have amounted to over $1 billion per quarter. He underscored the growing complexity of Ethereum scripting, emphasizing how increased complexity often leads to security vulnerabilities. Don't forget the 1 byte per quarter hacks, and rug pulls on its seemingly unsecurable script, which is just getting worse over time because complexity kills, and the F's in charge just continue adding complexity. And Adam Back, April 5th, 2024. And meanwhile, another ex-user named Colin offered a contrasting perspective. Colin pointed out Brandt's criticism seemed biased and failed to acknowledge ETH's unique capabilities beyond Bitcoin. And he argued that Ethereum's programmability sets it apart, allowing for features and functionalities that Bitcoin cannot replicate. Colin added, and yes, ETH fees are high, but Ethereum is doing more than Bitcoin is doing per block. Also, BTC's fees have been crazy high in the past, $50 per 2 transaction, and they will go up again by intentional design in the future. So if high fees are your complaint, you may want to take a good hard look at Bitcoin's future security roadmap. High fees are baked in big time. You should continue to research on this, Peter.